Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets. We got the SPY bulls with continuation. We had a key support level to be watching first thing this morning, and that was going to dictate, are we looking bullish or are we looking bearish on the morning? We had the high of yesterday as key resistance. We had the low of the hourly consolidation, this little bull flag on Friday afternoon as our key support. So that level was 251.50, and as we headed into the morning, we held that support level by 19 cents. And then the bulls showed up. So pretty much we were just sitting there waiting patiently. It took a little while to play out, but are we going to see a bear break or a bull break of this channel? And obviously it ended up being a bull break. First, we had the financial sector with a 5-minute equilibrium that broke bullish. Then we had the tech sector with a 5-minute equilibrium that broke bullish. And that's when the bulls really got their legs and their follow through. So we did consolidate again in the afternoon. Pretty much another similar scenario where that's now our key support level that we're going to be watching tomorrow morning. Can the bulls hold 253.93 and keep the hourly uptrend intact? When we lose the hourly uptrend, we zoom out to the daily chart and we look for a daily higher low to form compared to 243.67. Anything above that maintains this little uptrend that the bulls have going. We know the weekly chart is going to be looking to form a lower high. We've bounced about 50% of the dump at this point. And the question is, can the bulls maintain the uptrend? So we know on the initial daily consolidation, we're likely to form that higher low, but we're in an area now where the bulls, if you have a long-term retirement account, you're probably looking to hedge again. We had that hedge opportunity back in the 280s. This is now another opportunity after a significant bounce has played out to protect long-term positions and to start potentially building bearish positions, whether you do that through puts or selling calls or going short or leveraged ETFs. That depends on you and your comfortability, but that's what we're going to be looking for in the mid to upper 250s to be looking to protect against long-term portfolio positions. Otherwise, if you're just short-term trading, it's a loss of the hourly uptrend that indicates daily consolidation is coming. If the bulls show up again tomorrow morning after 255.95, we're looking up at 259.40, and this level differs depending on whether you're using adjusted levels or not. SPY has the dividend, and that is it's a bit of a not real level on the chart, so to speak. It's an artificial change in price. So if you're looking at SPX, it doesn't have that. So if you want to keep it simple, SPX 25.85 is the resistance if we do see the bulls get some continuation. So IWM is a lead indicator. It has been on this move up. Inside bar broke bullish. Strong continuation. Hourly uptrend. Higher low is 138.89. If that level holds, the bulls maintain full control. If we lose the hourly uptrend, we zoom out to the daily and we look for the daily chart to form a higher low compared to 131.65. That's the key support level. And keep in mind, again, we've seen at this point, 7 out of the last 8 days are green. So we're getting a little extended and we know to be cautious as bulls at these levels. QQQ on the daily time frame, very similar to SPY with its follow through. When we lose the hourly uptrend, and the last hourly higher low trying to form at the end of the day, 157.55. If we lose the hourly uptrend, we're going to look for a higher low to form compared to 149.49. Again, you look at the weekly chart, we know a lower high is going to form, and we've been bouncing for 2 weeks and a day at this point, so remaining cautious as bulls. This is the 5-minute equilibrium we had at the start of the morning to indicate the clear bull break. And let's pull that up. We had the high of the morning, low of the pullback, lower high, higher low. This was a bottom fishing play with the low of the day at that point. Clear bull break, bit of consolidation, and then there's your big leg up with the follow through. Financial sector, a little bit less strong comparatively. Significant consolidation at the end of the day, and we didn't see a higher low try and form. Bulls must hold 24.06, and if we lose the hourly uptrend, we zoom out to the daily chart. And the daily higher low that the bulls need to maintain is going to be down at 23.40. 23.40. And again, the 5-minute equilibrium this morning, first thing, was an indication of direction to be looking. So we had the low of the day, high of the bounce, higher low, bull break, higher low, higher high, and then we just had a 5-minute uptrend for the rest of the morning. So that's always a nice scenario where you have a clear support and a clear resistance level in a channel, and you just wait for one direction to break to start the day and give you the momentum. Oil on the daily time frame had a solid start to the day, but we did see an upper wick of profit taking. Again, oil has now seen 5 green days in a row, so we know consolidation is not far away. We have a range on the hourly. We just held support 48.36 by 7 cents. If we break these two support levels of 48.36 and 48.43, then we know daily consolidation is coming, and the bulls will need to form a higher low compared to the base of support built at 44.33. So that's the most important daily support level, and everybody is looking at the same thing. Everybody that we've looked at, hourly uptrends are intact. Lose the hourly uptrends, we zoom out to the daily, we look for a daily higher low to form, and we will gauge what the consolidation looks like. Is it increasing bear volume? How much of the move have we given back? Those are ways that we gauge, is this healthy consolidation, or should the bulls start to be worried? Natural gas, we're looking for a bounce to play out on the daily time frame, and at this point it's absolutely a bear flag on the daily chart. So there's no significant sign of a bounce at this point. We've got resistance of 3076 and the support is down at 2096. So there's our channel on the daily time frame. 4 days within that channel, 4-hour time frame, a little choppy. Sunday night opened up and we dumped down again. We saw that a week ago as well, with a much more substantial dump down, but we're in a sideways channel on the daily chart, and we're going to wait for one of these levels to break. If we get another leg down, the daily RSI will be back to oversold. I currently have a small position. I'm playing the weekly chart, and I'm establishing a position anticipating a weekly bounce, but I have plenty of cash waiting for this position because, again, I'm going to scale in extremely slowly, and I'm only going to add to this position if we dump down to the low 280s. I'll add one more, and I'll still have another position to go if that is the case. So I'm sitting in one position, slightly in the red at this point, but this is a longer-term swing trade for me based off the weekly chart. And again, being very patient not to get in too early here because we don't have much sign that the bulls are doing anything to shift momentum at this point. VIX on the daily chart still weak, lower high and lower low today. Not much follow through for the bears, but still in control. The daily bounce will start on VIX. The exact opposite of what I've been saying. When we change the hourly trend for the bulls, then we have the daily higher low and we look for the bounce to take place. Anything under 22.27 is just a lower high on the hourly. Support is down at 20.91. Have to change the hourly trend to be looking for the daily bounce to play out. So a solid move for the bulls, a significant move for the bears. And look at the move that we gave back. We're pretty much back to where we were on December 14th, and if the S&P 500 was back to where we were on December 14th, we would be up at 2,600 right now. So VIX pulling back a little bit harder than SPY is bouncing, just comparing those two. That's where we stand as we head into tomorrow. Watch those hourly uptrends. Bears starting to poke around a little bit. A lot of names very extended. Netflix extremely extended. CMG extremely extended. Amazon's even getting extremely extended. The biotech sector, more buyouts happening in the biotech sector to get extra lift to the upside. That was a big gap up open and a huge bull day. But look at the weekly time frame, and a weekly lower high is more likely to form than not. So even the biotech bears are starting to keep an eye out for signs for entries. So bottom line is bulls have control still, but we're starting to shift our focus in the opposite direction. Appreciate you watching, and watch those hourly trends. Have a good night.
One, two, one, two, one, two, one, two.